Hello, everyone. Welcome to Forward Focus. So, how is everyone doing today? Some of you start off your weekend already? Some of you. I heard the weather report here for Tucson today, and it is supposed to be like 97 degrees or some obscene number like that for April. It's going to be a little toasty here, guys. My son had the heat turned on this morning. What are you doing? It seems, Mark, like everybody has stuff to catch up on. It's like impossible to stay on top of every single thing these days anymore. I have some traders I work with, and like they'll purchase one of the courses, and they'll be like, I know I need to get through it. You talk about this stuff all the time. I need to get through it. And it's just like daunting to like just sit there and spend a couple of hours. So I'm like, you don't have to spend a couple of hours, just 20 minutes a day. You're going to start to pick up on things, and it actually will sink in a little bit better that way too, because you'll have time to ruminate over, each aspect that you're looking at. You try to put everything in all at once, and it's just like way too much information overload. So just start slow. Pick little tasks that you can get done at a time. And hopefully you don't have like a 7-year-old home for 8 out of the last, oh no, not even 8. What is it, 11 out of the last 14 days? Yeah. It's been fun. So we are going to take a look at the overall market here and what we've got going on as we head into next week. So I'm going to flip on over here to our charts. Oh, nice. Wayman is in Tucson too. Cool. I'm meeting a couple of traders here that are in Tucson. I am up in the foothills. I have only been here though for about, since last June. Let's see here. We are going to start off with the NASDAQ. You will have to shoot me an email, Wayman, and let me know some of the things to do around Tucson. We've been exploring, but I know there is so much left to learn. Stay cool, right? All right, you guys, for my email, that brings it up. I am going to post it in here in chat. Someone's asking. So really simple email address for you guys. It's just tony@tonyhansen.com. Spell my name correctly, and it will get to me. All right, folks. So we're going to take a look at the larger time frames here on the NASDAQ. And what we have been seeing is this widening megaphone that has been forming on the monthly time frame. This is wave 3. And with each wave, we've been getting an increase in momentum on the monthly time frame. So we're actually at a pretty strong trend exhaustion level. We were looking at this as we headed into the year. We took a look at inflation adjusted charts as well, going way back to the inception of the indices. And basically every single index is at major exhaustion points, trend exhaustion points. What we have to keep in mind though is that this action that we've seen here so far, this is just really minor compared to the bigger picture. So actually we were looking at trend exhaustion way back in the end of 2017 going into 2018. And what we're seeing here is just really the start of a larger congestion, a larger correction type of zone. When you have momentum increasing into the high though, it's not unusual to see attempts at slightly higher highs. This is kind of what we're starting to see here. I'll show you some charts on some smaller time frames that will give you an idea of some of the ways this type of move can correct. Let's see if we got some examples. Let's see here. So we don't always get like the big, large corrections. Even looking at this on the downside, just looking at like the corrective move here on the downside. So see the wedge that we had going into the 18th? What you'll notice is that 3 moves down, and then the wedge, and then this turns around. So in this case, it actually goes and leads into a larger price correction, correcting in this case from the downside move. So price extension here. But this whole idea here can be flipped over to what we're looking at on the monthly time frames. But other things that we can see with the widening wedge is that a wedge doesn't necessarily lead to a reversal. This megaphone doesn't necessarily lead to a reversal. Sometimes it can lead to continuations or it can lead to false starts of continuations. So what can happen is we can get this continuing to widen up, and sometimes it will go and hold the upper level, pull back up, and then go and still keep continuing that range for a little bit longer before we get a breakdown. That's not unusual either. In fact, I noticed some of you guys were talking about a similar pattern like that last night in the forum where it was widening the wedge, coming down like that, and then bouncing off of the low. So in that series, you can see we're still pretty early on in what could be a much longer zone of congestion lasting a couple of years. So what we have to keep in mind is that this period in the market is going to tend to be fraught with more of the back and forth type of moves. It's a pretty good type of market for swing traders, short-term position traders. Not the best type when you're looking at much longer term investments as far as like the overall indices go, because you'll see a lot more whiplash than people are used to seeing since basically 2009. A lot of traders these days, they don't really understand what the market was like before 2009 because they've only been in it for the last 10 years or less. But the action that we're seeing here is now coming into a phase where you're going to get a lot more of the back and forth type of movement. So I was flipping through looking at individual securities and the major indices over the last couple of weeks here. And a lot of them have shown shorter term exhaustion type of moves. We're seeing a lot of things that are going like this, where they've had 2 waves up. They've got nice measured move exhaustion levels. And yeah, they can go a little bit higher, but the risk is greater that they can start to shift momentum and reverse, because with the 2-wave movement, it is a pretty good indication that you've got exhaustion coming in. In the overall indices, we're at a tricky point in the market. You can see that there haven't been as many clear, clean-cut setups here over the last couple of months. It's basically just been pushing higher and higher. We get levels like this where you go from this kind of deeper V into the narrower V. And a lot of times this type of pattern will lead to these rapid flush moves. They don't always flush to the downside. Sometimes you'll get an attempted move to the upside, but more often than not, they will try to go to the downside. So you can see another example here. The V pivot, the congestion along the highest, you'll see the false kind of flush up to attempt to break to the upside. and then you'll see the move to the downside. So that's the most common type of thing that you will see with the current action right now. So that is what you're going to want to watch for as we head into the next week, because it does have that risk of that extra flush. It is a trickier zone in the market because a lot of traders will get false setups one direction or the other, only to see it then go and flip on them. So you want to be a little bit more aggressive when you're thinking about trade management, to not just do like do or die points, not just do like a do or die type of position. So for example, if you're trading like a breakout, trading range breakout, then especially if it's already had 2 waves of upside, then the odds going to increase that it might not fully break completely. So if you get about 50% of the level of the previous impulse move, that could be a good zone to take and protect part of the position. Because when you're at levels that trading can be a little bit riskier of a stop, if this goes and shifts and changes momentum, you can add back in if you get the nice solid 2-wave correction. But it helps you with larger trade management so that you're not ending up with a series of, for example, it goes like that and stops out on you and just can't get going. So some of the more advanced trade management is advisable at levels like this, where it is a good point that we can start to see some bigger corrections, but it's not really a great point for a major correction yet, just because the momentum is still pretty strong. Intraday, we've just been trading a lot of the back and forth type of movements in the market on the intraday charts. And that's basically what we're going to be looking at as we go into next week as well. You can see a little bit of movement here into yesterday morning. I'm going to go pull up. Need to turn this on so we can see today, going into today, rest of yesterday's activity. But this type of range here, it's really common to see a lot more continuation of back and forth action. Get that loaded. I did a restart on my computer here, so not everything is fully back up yet. Let's go take a look at the other indices here quick though while that is loading. So a larger time frame on the weekly on the S&P 500, you can see the wedge formation here as well. This widening megaphone wedge. The other type of wedge you will see is the triangle going the other direction. Sometimes you see them back to back. You'll get a diamond formation as well. That's actually pretty common. So we've got this little bit of a slowdown here, kind of a little bit past the 50% point. So what happens is that even though this is a level of price resistance, it doesn't fully negate the potential for this to widen up further. So this can even go and continue with a larger megaphone as we go into the summer. So I want to keep that in mind as we're looking at trading action here. This is some place that I've dubbed the wipeout zone because it's really easy to get the false starts one direction only for something to turn around the other way. So if you're not used to paying attention to multiple time frames, maybe you focus primarily on like a daily or a weekly chart, it's really important to drop down and look at what's going on like the 120, the 240, so you can see momentum shifting that can be taking place on a smaller time frame. Let's pull up the Russell. Oops. So this larger correction type of move and then the congestion and then the break, this is an example of that. So it'll have the deep V, kind of congest along the top, can have a little bit of a breakout here where it gives like a little bit of a false start and then pulls back. That's kind of what we're seeing here on the 8,000 tick chart. So this is just another version of that. daily chart in the Russell. What I was originally looking for was an inverse head and shoulders. As you can see, the time correction was about the right amount of time for this right shoulder, but what happened here that is less than ideal? Who can tell me? Jeopardy theme song. There's a little bit of a change in momentum, right? So when we look over here, we've got a triangle, which means that the entire momentum is more sideways there. This has a little bit of a faster overall correction, but it's still pretty average. Right shoulder did not consolidate for upward breakout, so you don't have more of a basically a base type of move. There's no additional shift in momentum here. Each of these moves down is really sharp. That's correct. What else? How about here? Is this ideal? Jay has it correct, one of them correct. It pulled up more than 50%. We were right at around like the 61.8% retracement. So actually, ideally, you don't want it to go above the 50% for your right shoulder, but also you want the high of that shoulder to be lower than the one that is on the left. So an ideal shoulder would be right about here. And so what this means is that since we're at a little bit of a higher point, it still has the inverse head and shoulders pattern that's set up here a couple of weeks ago, but it can impact the follow through on the trade. It can make things shift momentum. It can make it, have more of a slower move, and it just makes timing continuations a little bit more difficult. So that's something that we've got to watch for. Is this a nested inverse head and shoulders? So that is something that could have happened in here as well. So you'll often see, for example, in the right shoulder, you'll see a smaller inverse head and shoulders, but you want that whole zone to be about the same as the previous one, as how long the previous shoulder formed in terms of the time development. Another thing you can look for is you can look for like the pivots. So when you've got that is equal distance there between the pivots, and that can also tell you, hey, is this going out a little bit too far to be ideal? Because if this had based here, then it would have pivoted for a breakout where your time development between each of the lows would be closer to evenly spaced. So this just kind of, even though we've got the spirit of the inverse head and shoulders at play here, it's not quite as ideal as we would like to see. So what that means is that if you're trading like a normal inverse head and shoulders, you might have a success rate of, even over 80% for getting a measured move on the breakout. So you can buy here, and most of the time you're going to get to at least 100% for the price extension. But if things are a little bit off like this, it can struggle. It'll have a harder time trying to get that larger move in. So you'll want to look at smaller moves for measure moves to identify some closer target levels and watch for the potential for momentum to shift. Because of the widening megaphones that we're forming on the S&P 500 and the NASDAQ, this does have the potential that it can try to do something similar where it pulls up all the way to that new high level. That's not typical for an inverse head and shoulders, but because of everything else that is going on, we don't want to completely dismiss this possibility. So we need to watch how the momentum comes out of this level. So if, for example, this had like a really nice base for shoulder here, so ideal situation actually would have been the same thing we looked at on the larger inverse head and shoulders, if this had had the smaller one here on the nested head and shoulders, then that would have been a good entry point to have the higher probability of success. You still get great trades when you've got cons as long as you manage the trade properly, but I don't do something where I take like a channel break and a stop under the low and then just look for a full target or a stop. I want to work the position a bit. So I want to get into a position, take a little bit of the trade off, look for zones to add back in that I can lower my risk exposure. So there's a lot of classes for those of you that are in League of Traders that discuss this, and also the Advanced Trade Management Bootcamp that goes into managing positions like this. So it's pretty systematic. It's not something where it's a huge amount of guesswork. It's a pretty systematic way of managing the trades, but you're going to get better results in the end. Now, the main thing that you have is, like, for example, if something just takes off, you take off part of your position at a closer level of resistance, like a smaller measured move, and you don't have a zone to add back in, you're going to end up with smaller gains overall on the winning positions. But on losing positions that would have otherwise stopped you out, you're more likely to end up with a scratched trade or small gains or small losses. And much more rarely will you get a full stop. So it leads to steadier gains overall. It's not like rapid swing up, rapid swing down in your account. It has the slow and steady pace. Do I want to see a phoenix on the second shoulder? Ideally, yeah, that's what you want to see, is that this shoulder is actually a phoenix. So another way you can do it, another tool, is you can use a Fibonacci fan, go from the low to the high, and the better phoenixes are going to come off of a 76.4% Fibonacci fan level. That's going to increase your probability of success as well. So if it bounces off of a closer fan level, let me actually put the fans on here so you guys can see what it is. So if it comes off of a closer fan level, like 38.2 or 50% here, then it's not as ideal. It's more likely that it could kind of just shift up with a slower move, like what we're seeing right here. So the fans are a great tool to help you with timing as well. And as you can see, because of how steep this was, in order to get to that 76.4, that's a pretty long zone of congestion here compared to the right shoulder. Let's go take a look at some of our other markets right now. We're going to look at the Forex. CH. We are into earnings season now, you guys. So what you're going to see over the next couple of weeks is there's going to be a lot more of the gap plays coming out. A lot of the financials were this week, so it was a pretty heavy based financial gaps. We saw earnings on Netflix. CHKP is a really good one from yesterday, where decent sized gap down. You can see the momentum shift here at highs. And things like this are really good for playing intraday strategies. They could be just day trades. A lot of them can turn into swing trades, but they offer great intraday strategies. Tim asks, how do I play earnings? So one example, in the bigger gaps down like this, where the gap is more than twice an average day's range, a lot of times what they'll do is they'll try to pull up into the gap zone. They'll try to basically close at least part of the gap. And it's really common to see an initial continuation of the gap out of the open. But then what I watch for are the Phoenix moves. So there was a smaller one here. This is the one we followed in League of Traders. So kind of a smoother move down would be to look like this. So you will see this whole series of patterns really common out of the open for gap. That'll be like a large gap down. So if this is your gap zone, it'll come down, have two main swings to the downside, a lot of times with really strong momentum, kind of shift momentum at the lows. You might get like a little phoenix there, and then they'll go into a bigger phoenix. You have to watch the momentum coming out of this phoenix though. So if it starts out slower, it might have a harder time getting to a full 100% extension, but 95% of the time, it's going to at least get to a 76.4% extension. So if you buy here, your stop is here, you're going to get at least 76.4% of this impulse move coming off of the low as a target. So that's a good intraday play to watch for. That's just one of them that we see with the gap strategies. I'm going to do a free webinar next week, you guys, so on gaps, just because we are in earnings. So if you keep an eye on your email for that, you'll get an invitation for that next week. So I will give you guys some greater details on the strategies. But Tim, that's a good one for one of the types of strategies that we see with gaps. And again, it has to do with like gaps like this that are pretty far down. So we were watching Team as another example, but it didn't give us as good of a setup for that. You can see there's not, when it did basically here, here's a version where you can see the two waves, but then we needed a little bit more of a shift in that momentum and then into a phoenix. So when it tried to go with the phoenix over here, it just struggled. It couldn't really get off the ground. So these are the types of trades that end up being more of a scratched trade because they won't get going. But leading up to it wasn't as ideal either. So this isn't one we took, but we were watching it right away at the open because of the type of gap it had. So a lot of times the earnings on these, where you get the momentum shift and then the gap down where it's breaking this channel. This is what you're going to see on a lot of the earnings as we go into next week, because so many of them are at extended levels like this, that what you're going to see is a lot of shift in momentum and some pretty big gaps. So many of these will try to pull up for a week or 2 weeks, a lot more overlap from one bar to the next. And then the ones that are the weakest on the pull up, they can offer continuations on the downside. So they aren't just something that you'll watch for the day of the gap and then just kind of ignore after that. I usually put stocks that I like the gap in into a watch list, and then we'll just keep an eye on it and looking for strategies on like the 240-minute time frame for continuations that can be swing trades as well. When the gaps are smaller and it closes up at the highs and gaps down, but it's only just barely breaking the channel. So let's say this closed up here, highs here, gaps just down to the under the channel. These can lead to really strong downside days that can then offer continuations as swing trades. So those are the ones that are going to be some of the best ones for continuation type of plays. And they will often have, at the very least, a really strong trending morning, but they can have full trend days as well. I can't think of anything off the top of my head that was a really good example. But if you look at this right here, see that 2A correction and then the shift? That's the type of thing we want to see on some of these that are gapping down. And you can see the same thing just inversed on upside gaps too. So it will flip and turn around the other way too. So can I look at Amazon? Yes, let's do this. And we'll go look at these Forex here in a minute. So you'll see the same things even on stocks that aren't gapping. They might just not be as clear. So like here's their two waves down. This is where you would look for the shift. And this is your Phoenix. So you can see, again, it was a messier start. The shift here wasn't as ideal. It was still kind of strong to the downside. So the Phoenix struggled. It still managed to get higher, but it just couldn't put in that full 100% move. So these are things when you're using advanced trade management, when it gets to about 50% point of this move, that can be a key level. It's actually 50% to 61.8%. So if you see a smaller measured move in there, it's worthwhile to take off part of the position and then look for an opportunity to either get back in, or on gap plays, I don't often look as much for getting back in because I know that if this is coming off of more of a V bottom, the Phoenix might struggle more. If it's more of a rounded bottom, there's less of a struggle. So that also will play into how this low forms. So when you get the two-wave correction and then you get that shift into that third low, what that does is it rounds it out more. So when you get the Phoenix play, it has a stronger opportunity for an upside move. And you'll sometimes see a little smaller Phoenixes here to start with, like at the bottom, that can get you in much earlier. And then you can play those, take part off, look for a two-wave correction, add the part back in, and move your stop on the rest of the trade. So that's just like a little brief explanation of one of the ways that you can do that advanced trade management. Let's look at the daily time frame here. I'm going to remove this fib. I'm not sure even what that was referring to because it's not anywhere I normally would draw something. I might have moved it on accident. But here is again the same intraday strategy that I showed you guys for gaps. It is just played out on the daily time frame. So instead of getting that shift in the momentum right there, it shifts it like this. So it's another version of it, and then it goes and it forms the Phoenix. So in this type of Phoenix, this is where you're looking for around that, 76.4% as a target level. Let's see exactly where it is right now. Exactly at 76.4. Notice where I drew my extensions. So you can do them kind of two ways when you get a widening wedge here. When you get the megaphone, you can go from that first pivot and then go to the last pivot in your congestion, or you could go from your low to the absolute high of the congestion to the absolute low of the congestion. They're going to give you pretty even zones of target. You can even see here the 61.8. I mentioned earlier when you get to the 50% to 61.8% level, it's actually more 61.8 will be the pivot, but it likes to have a little bit of a pause there. So what can happen is it can stall at the 61.8, pull into the 38.2, and then go from there. So to get the strong continuations, you want this to be a smaller correction than what you would see in here. If it's larger, then it has a harder time getting to 100%. So in this particular one now, let me widen this up. What do you guys see right here? I already talked about it when we were looking at the overall market. What do you see right here? Slowing momentum, but especially slowing momentum following what? V, pulse up, shifts. So what's most likely to happen here? Anyone? Mark is the closest. So this can give intraday avalanches. Anthony, sometimes you can see a little bit of a spike up, but it's more likely to try to flush down and basically come into what would be a parallel level of support. And that's where you would see a support hit. So that's the most common formulation of how this plays out. Like I said, it doesn't happen all the time like that. But if you were going to pick your odds are the strongest that it will try to go for a flush to the downside. So this is considered to be one of the trickier places in the market to trade. This is what I call the wipeout zone. And the reason I do that, because we'll have the strong move up, shift in momentum. And we get shifts in momentum that will go and try to do measured moves like this, here to here. But they also have that risk of that extra flush where it widens out the channel like that. And what it tends to come down to is just little momentum changes at the very end. So it is one of the hardest zones for traders to trade, even though it is one that tends to lead to really rapid moves, both directions. So when it breaks to the upside, it tends to be a pretty strong move. Breaks to the downside, it tends to be even stronger. But they're the harder moves to try to trade. So if you see that happening in the market, especially if you're a newer trader and you're trying to build your confidence in the market, that's one of the more difficult places to trade. But if you get a V pivot and then the congestion like that, more likely that it will try to flush. So if we're looking at Amazon just on the daily time frame into next week, that would be my main concern. Let's go look at it on the 240 minute. And that still looks like that has that potential on the 242 as well. You can see kind of a little bit of a smaller version of it in here. Drop off in volume. This tells you that traders really aren't sure what to do here. And you see the same drop in volume right here with our, this is a Phoenix here. Megaphone, Phoenix, drop here. So that drop in volume actually indicates this is like the best spot to work on building a position for a break to the upside. When you have a megaphone type of move, getting this flush back down into the channel, that's normal. Let me put the fans on here. So if you see this initial correction here comes into the 76.4, this is based upon a really sharp momentum move to the upside though. So this can lead to these smaller moves, but they might not just hold for the full continuation. So what I want to look for instead is shift this over and look for where one of these highs is going to line up the low of this megaphone closer to that 61.8%. And when it's lined up with that 61.8%, your 76.4% is going to hold the majority of the time. You're going to get a reaction off that 76.4. So that's going to help you with your timing for additional continuation. And what that can also do is, again, with the megaphone, that can also help prevent you from worrying as much about getting flushed out and can allow you to keep a little bit of a wider stop for the potential that it could just be flushing into that support level. So this is a common situation when your congestion starts out like this. It will try to pull up a little bit, but doesn't have as easy of a time just continuing. It will usually try to pull back one more time. At what was the point on the megaphone that I put the fans on? So what I'm looking for is which of these points is holding some of these previous fan levels. So this, in this case, it was the second point. And especially when it held this last one at the 61.8%, because then that tells me, hey, this entire correction here is going into the 61.8. And then the next portion of the correction, you want to look into the 76.4. You can see again the volume drop right here with the smaller setup. But there's no spike in volume when it pulls back down into the support. I know I'm showing you guys some more advanced stuff here today than I usually do, but hey, it is overall market holiday, so do things a little bit differently today. Let's go look at our Forex pairs. So the euro dollar, basically we've been seeing this for quite some time. It had the opportunity to do that shift coming off of this low to go up to the upside. Again, it was a megaphone. What you want to see though is that at this point off this third low, you want to see a retracement up into this zone and then a correction and then a continuation. So this had the lower level Phoenix. Phoenix shifted momentum on the breakout, and it's basically trying to change momentum and has a greater risk now of fully doing a larger breakdown. And the reason for this, as we've talked about over, well, the last 6 months really, is because we are right at a halfway point on the monthly time frame. Let me show you guys that. You can see it on the weekly too. But in this bounce, we pulled back about to that halfway point. So this can do again that shifted continuation and pull back down again. Or it could have based, gone into more of a Phoenix and tried to move back up. This became a do or die point. But when it couldn't get going off of that third low and the momentum just did not pick up and shifted the momentum like this is shifting the bias now in favor of another larger secondary breakdown on a weekly time frame. So let me switch this over to weekly so you can see that. So what can tend to happen is it will just change here and then break. So this is what we're looking at, is can it continue to hold this slower move up, and then that's going to look more like a breakdown. So again, this is what you consider the wipeout zone. Wipeout zone is basically where you've only have one major wave and then you get a shift in momentum. Two major waves and a shift in momentum is more often reversal. But if it's one major wave and a shift in momentum, that can go either way, especially when it is the midway point. This is what makes it most difficult, when it is the midway point. Aussie dollar, we've got a nice little two-way bounce up. This is showing a little bit more weakness on the daily charts heading into next week, but the weekly is kind of more iffy. You can see it's trying to do a little bit of an inverse head and shoulders. It's just struggling with the continuation on it. So I'm wondering if this is going to try to hold into a longer base here. Let's go look at the monthly. So what we're looking at here is that we're actually the second test of the support zone. So first test of a support, you can get stronger bounces. Second test of a support, especially if the momentum is average, just lower than average, to retest that. You don't know, or sorry, especially if it's average, not slower than average, but especially if it's average to a little bit stronger than average, it can go and just base like that and then try to break down again. If it is a lot slower than average, like that, you usually get a good bounce. You get a stronger bounce. But that second zone where it is average to a little bit stronger than average, in this case it's just average, pretty much overlapping every bar, it's not necessarily going to give you as strong of a price bounce. So again, a good place to use advanced trade management just to kind of test the waters. So you get positions in the direction of a reaction off of the support. But if it doesn't fully materialize and just kind of goes into congestion, you're not going to get hurt on it. You don't just go buy this and keep a stop under here. Look for doing a little bit of management based upon how momentum is shifting within there. And that's going to keep you from ending up with those full stops when you have good support for pivot, but not necessarily ideal trend placement for it. And again, it's also that midway point of the previous upside rally too. So overall, I have a bias for this zone to hold as we go over the next couple of months here, but it might end up being a choppier hold. Daily time frame, again, like I said, there's a little bit of a bias for a little bit of a pullback here, but because it's trying to do this inverse head and shoulders here, it could just be enough that would just create a trap for people trying to trade a pivot and then still turn around again. So this is a really high risk zone right now for new trades. You got the rounded lows, so it's not as ideal for continuation on the downside, and the inverse head and shoulders. And it's a bit early as far as time development goes too as well. So time development for this to try to break down more, basically what I'm looking at time development wise is this move here and then out. So these tend to be key time points in a security that's going into a range like this for major moves to kick off. We're just not at one of those levels right here. Dollar yen, this has been the one that I've been trading the most. It actually has a pretty narrowing triangle here, this narrowing wedge. So what happens with these narrowing wedges is, and this is just like a trade I gave you guys in the League of Traders forum the other day, these will often break one direction, and you're looking for measured moves on the smaller scale. So it can sometimes do a measured move here to here, but if the momentum is stronger than this one, then it can go there to there. At that point though, it can try to correct again. So these triangles, especially when they're at like a larger level of resistance, they can give you a break one way, kind of like a false break, and then turn around and break down the other way. Now again, this one is a midway one. So that means that this doesn't have as strong of a bias for the directional break on a larger scale. What it can do is it can break here, can pull back down here, and then go up again. So you'll usually get this kind of opening up so that you get more of a better channel coming out of the triangle. Let me see if I can show you. I'm going to find that chart and show you guys what that looks like. Kind of put it into perspective better what I'm talking about. Let's see here. There's our CHKP. Didn't think it was that far back. Hold on. Find it. Here. So here's an example of how triangles will try to break out. So you'll get the initial breakout, and it might only go to a measured move here and then try to turn around, or it could try to go for some of the bigger ones. Like in this case, I was looking at slightly higher. And here's how it played out. So notice you get that first initial break, but then it can pivot and it can do it really quickly. And that's what we're looking at right now on the dollar yen as well, with this type of triangle type of move. We said yesterday the Russell moved up and then down from a triangle. So that would be another one to go look at as well, to show you an example of how these moves can play out, is to go look at the Russell also. This is a monthly time frame. Oh, we got some beautiful butterflies outside the window. Distraction, squirrel, now butterfly. My son is bringing my attention to that outside, but yeah, this is what you can expect from this type of move too. Let's see here. On the smaller time frames on the dollar yen, here's the 240-minute chart. So you can see we're getting a lot of back and forth type of movement. Things are just kind of trying to shift momentum here. A little bit of this rapid inverse head and shoulders. The time development overall, just how this formed, is really small compared to the upside move. So it's not as easy to get a full scale breakout. But what I want to look at here and show you guys is this move right here. Really sharp, extreme strong move. Continues the move here. It's basically your right shoulder, but it's stunted. It doesn't make it to that 100% level. So this could even go into a zone of congestion here and then do another wave on the upside. That is what I'm watching for right now on the dollar yen as the most probable pattern to form on the daily time frame. So I want to keep an eye on that as we go into next week. For a breakout, basically it would be kind of a tilted phoenix type of move. So the overall placement on this larger daily trend is kind of a messy zone. It is at one of those tricky zones. It's at, again, that halfway kind of congestion type of zone. A little bit slower momentum on the upside here. But I still think that we have the potential for that continuation with that tilted phoenix here going into next week. So that's going to be the main thing I'm watching as we go into next week. Here's the intraday with the 240. Notice widening wedge. So what can happen? It can pop up, right? But it could still pull back again before it tries to go. So it could give you a false setup to start with. Pull back, break that previous low on the 240, try to flush people out basically, and then go and give the more solid continuation where basically you're looking here to here for an image move target level. Just be aware that this could give you a false start early in the week, pull back, take out the previous low. Sometimes it'll even take out the previous two lows and then go. So be aware that that is possible given how this is forming. Dollar Swiss, we are right at the upper end of the megaphone on the dollar Swiss. I think it's funny. I gave a class here in League of Traders a couple 2 weeks ago on the megaphone, and I was looking to see how folks might have been taught to trade it. Just simple Google search. Hey, megaphone pattern technical analysis, and they're like, this pattern is really rare. Blah, 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 blah. And I'm like, what? This is not that rare, especially when you go into a market that is entering corrective phases. So the overall market going into that much larger time frame of correction, we are seeing a lot more of these forming on daily and weekly charts. And if you look for them and pay attention, they're not that rare at all. So it's a pattern that is pretty common. It is mostly the most common when you're dealing with corrective zones in the market. And it is one of the harder, more advanced type of strategies to learn. So we're coming right up at that upper end of that. We've got pivot 0, 1, 2, 3, 4. So you're coming up into the fourth pivot here. 240-minute time frame. Good shift in momentum. You can see the trend exhaustion here. So we are at a good exhaustion point as it's coming up into that upper megaphone channel as well. Because this is so strong, kind of want to look for some sort of shift here, like a 2T or something that can pull this back down. Ideally, you want something that has, for if you're doing like pivot trades, your ideal pivot trade is going to be something where it has at least consistent momentum up into that high. When it has gaining momentum like that, then the options for how this can react to the higher can shift. You can get it continuing to kind of chop back and forth with slightly higher highs to try to shift the momentum. You can also get something where it can pull sharply and then go into like an avalanche type of move and then go like that, where the overall correction might be a little bit slower. In a typical megaphone though, this is one of the zones where you have more of an exception that a strong move generally corrects with a slower move. In a megaphone, you can get strong moves and the sharper pivots. You can see an example of that over here. Yes, it had a little bit of a shift, but it wasn't really a substantial shift. It still managed to make it back down. And that becomes most common, again, when you're coming into that fourth pivot too. So it would not be something that I would rule out to expect a stronger drop on it, but I want to see something that's a little bit more of an intraday setup. US Canadian dollar, this is forming a little bit of a Phoenix type of move. It's kind of going out a little bit longer than I would like. You can see in here, ideal trend development for this as a Phoenix would have been right here for breakout. Basically, you're looking at corrections where you got about the same type of correction here. And so this had a little bit of a shorter little Phoenix. It would have been ideal if this pulled up a little bit better here and then based to try to go. So this is showing me this is going a little bit longer. It's increasing the risk on the trade, that it could give you some false setups, have a harder time fully falling through, can have greater flushes. So we do have the Phoenix setup on the daily time frame. It's just not as ideal now because of the time development factor. Let me look at though what we've got for fans on this one. So it is basically do or die. It needs to hold that zone here. So see how it hit the 61.8 first? 76.4 next? That's exactly what we want. So if this kind of more can just along in here, that can more easily pivot. It can go to only like the 76.4% extension, not have an as great of a shot of trying to do 100% extension. It can do more of a move up like that. So this is your do or die point. So if you took something like this, like on a smaller intraday time frame, basically you would want to keep making sure you're adjusting your stop up under there. Hold on a second. All right, you guys. So I gave you a lot of little lessons in this one. You'll want to go back and watch this. We are going to be posting Forward Focus at tonyhansen.com/Friday. So you can go there to review it within a couple of hours. And I will send out our email showing you guys what we've got coming up for economic data and earnings as we go into next week. Again, keep an eye on your email as well for an invitation to a class on gaps. I'm going to show you guys how to trade some of these earnings plays in a little bit more detail than we went into today. So everyone have a wonderful rest of your weekend. Those of you on holiday, enjoy your holiday. And if you have any additional questions, please shoot me an email over at tony@tonyhansen.com, and happy to help you out. Is there a discount on Fibonacci Mastery? There is for, hold on, Anthony, let me grab you that. I gotta look up the link. Just 1 second. I'll post that for you here. Yeah, if you guys have any other questions you need me to grab some information here for you, just stick around and let me know. So Anthony, Fibonacci Mastery discount for members is, let's see. Right here. It's not a pretty link for it. It just takes you straight to the order page there. So if you just click on that, that will take you to the order page for it. You're welcome. Tim, let's see. Since the hardest moves to get aboard are ride 'em cowboy trams that hardly pull back at all, are those the ones to jump on and hold for dear life? Not really hold for dear life. Uh, so you'll want to watch some of my advanced trade management classes. You know, I talked to just like really briefly about them in here, but that will show you how to ride those waves. That's actually like a move like this, for example. This is a really good example of how that can unfold. So it goes from the megaphone 0, 1, 2, 3, 4. Here's the entry. And then how to ride this. That ends up actually being that tilted phoenix with the measured move up here. So that's what advanced trade management class is. There are classes in League of Traders in the member section. Let's see here. There's a boot camp on it as well that just goes into it. Let me see if I've got a link on hand for that one. So it is about 12 hours. I know we can't do, everyone has like all the Easter festivities. My little guy has had this crazy, horrible virus and just, it looks like measles, you guys. It's just kind of scary. They say it is just another of the viruses that looks like it, but the only way to say for sure exactly which strain is to do a blood test, and that's just not going to happen. He's 7. You'd have to pin him down. So he is hanging out with me. they don't think that that's likely either because he's been vaccinated and everything, but he's one of the kids with immunosuppression thanks to asthma. All right, here's the, I know a lot of you guys are asking about it because I've been in League of Traders. He's been with me. Here's the link for that one. So it is just tonyhansen.com /manage. And that is a 5-week on-demand boot camp. And I can give you guys more information on that for those of you that want to learn more about that one too. Let's see, did I catch all of your guys' questions? I try to answer a lot of them as I'm going through. All right, cool. Okay, everyone, I am gonna head on out there and I'll post that link here too for you in the chat room. And I'll leave the room open here for just a couple minutes so that you guys that need any of those links can go and pull them up. Thank you. You guys too. Have a great rest of your weekend. And I will have the recording available here shortly. And you can always find it just going to tonyhansen.com /Friday. So I'm posting that here in the chat as well. So that will take you directly to the video recording for it.